In this short video, we'll show you how to get the most out of your brand new Finagraph. First, I'm going to sign in as a business. And the very first time you sign in, you'll be presented with a breakdown of the financial information about your business. Here I'm using a sample company called Machine Shop. And you can instantly see, without any software to install, without looking in QuickBooks, without looking at your financial reports, exactly what's going on with your business in this nice health overview section. For instance, you can see the trend of sales over the last 5 years. What were the COGS as compared to sales? What did the expenses look like? And even your earnings right here in front of you. You can also look over the last 4 quarters, not just the last 5 years, and see what's been going on quarter over quarter. And you can even get even more granular and see what's going on month over month. Here you can see sales kind of hovered in September and October, then took kind of a dive in November and a really big dive in December, kind of indicating the seasonality of the business. In addition to the health overview, you can also see certain risks that might be happening at your business. For instance, some simple ones here, things like what's going on with my cash. From 2009 to 2010, you can see a decrease in cash of about $75,000. But then in 2011, it actually grew by about $600,000. And you can see exactly what's happening, with cash, with your receivables, with your inventory, in a very simple red flag, green check mark type of UI. And one of my favorites that I always like to track is what's going on with my expenses versus my revenues. So here you can see that revenue grew faster than expenses in 2010. Revenue grew faster again in 2011. In 2012, I kind of had a flat year where my expenses grew a little bit faster than my revenue, and then I kind of got things back in track in 2013. Another really interesting thing to see is exactly what's happening with your business metric ratios, the ratios that lenders look at to understand and evaluate a business. These are really handy for business owners to fully understand and really get their heads around. Current ratio is one that's always just kind of looked at, and what it is it's a ratio that indicates the solvency for the business. Here you can see the meaning of a current ratio is if it's, let's say, 4.04, that means there's $4.04 in your current assets to pay for every $1 in current liabilities. If you have a low current ratio, here you can see some potential causes, or if you're looking to do some improvements, you can look at these potential solutions. If you're curious on how to get more detail about this and how you compare to the industry, just hover over this final little globe or flag depending on the ratio. If you're above the ratio, which means your business is doing good as compared to others in the industry, you'll see a globe. And you hover over it and you'll see that the industry average is 3.54. You're at 4.04, so you're doing better. And if you click on it, you can even dive into how the calculation happens. Your current ratio is 776,000 in current assets divided by 192,000 in current liabilities, which gives you the 4.04. And then just click out to have that collapse back in. But look at your quick ratio. You're a little bit low, right? 2.56 is the industry average, and you're 2.07. Again, you can click in to see exactly which numbers contributed to your quick ratio. Now, certain ratios have a big impact on your cash availability or the bottom line, things like gross margin. So here you can see the breakdown of gross margin, where the industry average is 37, but your gross margin is 41, which is better than the industry, which means you've actually, because you're running more efficiently, you have a financial impact of $66,000. That's fantastic. Because your gross margin was above the industry average, you earned $66,000 in more cash. That's a great indicator for how you're running your business. But if you look at the other side on these asset ratios, one of them's flagged. Right here you can see the inventory days of 75 is flagged because it's above the industry average of 61.52. And again, if you click in, you can see the industry average of 61. You have 75 days worth of inventory on hand, which means you have an extra $32,000 tied up in inventory. If you manage that inventory a little bit more closely, you'd have $32,000 in cash, just like the rest of the industry on average. So this is a couple of examples on how you can use Finagraph to 1, understand the trends of your business, 2, look for any risk indicators that might be affecting your business, 3, understand how a lender looks at your business with metrics and ratios, what those ratios mean, why you care about them, and then even how you stack up to others in the industry. And as you stack up, you can see how that affects your cash position and your finances for your business. Thanks for watching.